So good afternoon everyone. My name is Deepali Jose and I welcome all of you on behalf of Geojit Financial Services to this eGurukul session. So eGurukul, as some of you are already aware, is a series we have started to interact with our clients. We do about 1 or 2 sessions every month wherein we bring to you details of our different products, processes, any new offerings from Geojit or from the market. We also do market updates, analysis of stocks. We recently did a fundamental research report, how to understand the fundamental research report. Last month we did a session in Hindi because a lot of our clients wanted a session in Hindi and wanted to know all the different products and services that are available. So there are different kinds of sessions we do every month. Today's session is about a very special product we have in Geojit's product portfolio. It is called the Smartfolios. We have with us today Mr. Sony. Sony heads the Smartfolios. He's the product head of Smartfolios. He brings with him a long-term experience of almost 15, 17 years in the capital markets. He has worked in the Bombay Stock Exchange and with another equity research firm before he joined Geojit Financial Services in 2009. So without much further ado, I would like to hand over the forum to Sony. Before I do that, I would also like to highlight we have opened the chat box. Some of you have already started putting in messages there. Please type in any doubts you have, any clarifications you need in the chat box, because the mics are disabled primarily because there's a lot of people and that may cause disturbance. And I also request all of you to give us inputs in terms of what are the different kind of sessions you would like to see conducted in this eGurukul series of ours. It's really helpful. Like I said, we did a Hindi session. We did not realize so many people would want to know about our entire product basket, all the products and services available in Hindi alone. So please give us your suggestions and we'll try and implement all of them. So over to you, Sony.
Right. Thank you very much, Deepali, and a very good evening to all our clients, to all the Geojit clients who have joined us for this session, the eGurukul session. I think Deepali and team have been organizing this as an informative session, as a series of informative sessions for all our clients, and I really appreciate the idea behind this. So my name is Sony Mathews, product head for Smartfolios. Uh, so just to introduce Smartfolios before I start off, I mean, the usual question that a client faces, be it an experienced client or it could be a beginner, it could be a newbie to the stock markets. The whole point is, the whole point or the whole question that a client or an investor faces is basically which stock do I invest, when do I invest in it, and when do I exit, or when should I exit it. So that is, even when we go out to meet clients, so that is the basic question that that is first confronted to us. So which stock would you suggest to invest in, or which stock should I invest it right now, or should I invest it later on? So we have always, Geojit, in its 35 years of existence, we have always believed that, if our clients create wealth, then of course that bodes well for the company. And we have always tried to bring in good products into the market, which would help our clients to create wealth. Now, Smartfolios, it was started in September 2019. It's been around 2 years in existence. It was brought out as a broking product to help our clients invest in the right manner. Now, before I start off, let me give you the usual disclaimer. Smartfolios is an equity product. It is a broking product. It is by no means a magic wand, which will definitely or 100% help you to create wealth. No, this is no guaranteed product. This is still an investment into the stock markets and investment into the equity markets. And as all of us are very well aware, equity markets carries with it an amount of risk. The only way to reduce this risk is, of course, to invest for the long term. Now, the time that you spend in the markets is more important than timing the market, right? So with that thought in place, let me, I'll just show you a small presentation on what Smartfolios is all about and how Smartfolios can help you with your investments. I hope the slide is visible, Dipali.
Yes.
Yes, thank you. Right, so Smartfolios by GeoJet. Um, this is the website that we have, that is smartfolios.geojet.com. That is the website. All of you do, please do log in, please do go to the website. You will have a fair idea about what Smartfolios is all about and how it can help you create wealth in the long term. Now, to put it very simply, Smartfolios offers you ready-made baskets of stocks. Ready-made baskets of stocks in the sense, it will not be a focused a strategy in which we will recommend you to invest your money into one stock or two stocks. We offer you a stock basket. We have around 10 different baskets in Smartfolios currently, and each basket, a client can choose any of the basket depending on the risk profile of the client, the risk appetite of the client, or if you prefer a particular strategy or a theme in your investments, we have baskets reflecting that strategy or theme also. So it basically depends on the client to choose, okay, I would like to choose this basket based on my risk profile, or I would like to choose X basket based on the strategy that the fund manager is following, or based on the theme or the objective of the basket that the fund manager is following. So Smartfolios offers you variety of baskets, ready-made baskets of stocks that are there. So we'll send you the recommendations to buy, let's say 10 stocks, to buy 12 stocks. We will send you the recommendations. Now, these recommendations are all system generated. The recommendations will come to you via email. There will be an SMS alert that comes to you. If your WhatsApp number is registered with us, you will receive a WhatsApp recommendation. You can log in online to smartfolios.geojet.com. You can view the recommendations over there. And shortly, we will also be launching the mobile app version of Smartfolios. So you will be able to view it through your mobile app also. So there are multiple avenues through which the recommendations are coming to you. So we will send you the recommendations. The recommendations will come to you. The initial recommendation will come to you. So when you register, when you log on to Smartfolios, you choose a particular basket of stocks to invest in. You register for that particular basket. We will send you the initial recommendation, not just the initial recommendation. Now, out of in the basket, let's say out of 12 15 stocks, we cannot guarantee that all the 12 stocks or all the 15 stocks will definitely outperform. Of course not. The whole point of having a portfolio is that there could be some outperformers, there could be some underperformers. Now, if the underperformance is due to a particular reason, that is that could affect its future potential, stock price potential, then Smartfolios will also recommend you to exit from that stock. You exit from that stock because of this and this reason, and we will suggest another stock in place of that. So these are all recommendations that keep coming to you. It is not just a one-time investment. You invest, you have your initial investment into a basket of stocks, and depending on the fundamentals, depending on the technicals, or depending on whatever strategy the fund manager follows, we will keep updating you on whether a stock needs to continue in this basket, or would it be better for you to exit that stock. Now, the exit can be at a loss, it can be at a profit, because loss booking is also an important part of capital market investments. Now, many of our clients do not follow loss booking, and that has led to even more losses, because what happens, you buy a stock at 100 rupees, it goes down to 90, assuming that Smartfolios recommends you to exit at 90 rupees. We've received a lot of feedback from clients saying that, why would you tell me to exit a stock at a loss of 10 rupees, because 100 rupees has gone down to 90. But the whole point of this is that there is a chance that the stock from 90, it could go to 80 also. Now at 90, we cut our losses and we put our money into another stock. Now this stock could give you better returns. I'm saying could give you because there is no guarantee, but the new stock, you buy it at 90 rupees, that stock could give you better returns than the previous stock that you exited at a loss. So over here, the recommendations, they are system generated. It will keep coming based on the market outlook, based on the basket strategy, based on the basket objectives. These recommendations will keep coming to you, and it will be sent to you for confirmation. Only after the client confirms the recommendation will the execution also happen. So this recommendation will come to you via email, via WhatsApp, there will be an SMS alert. You can log on to the website, and shortly you will be able to log on to the mobile app also to confirm the recommendation. But our sincere request is that you follow the recommendations, because it could be a loss booking, it could be profit booking, but whatever it is, we would request you to follow the recommendations that are coming to you via Smartfolios. Now, once the client confirms, or once you confirm the recommendation, either replying to the email, or you can log in online and accept the orders over there, or you can accept it via WhatsApp, or shortly when the mobile app comes in, you'll be able to accept it through the mobile app. Once you just click on accept, the execution happens from the HON. The execution happens automatically. So you don't need to log into Selfie. Selfie is the GeoJet's trading platform. You don't need to log into Selfie. You don't need to put in your buy price. You don't need to fill in all these fields, nothing. You just need to confirm the recommendation via email, or via WhatsApp, or by logging in online, and the execution happens. So it is hassle-free order execution. Now, for similar products, we understand that there are charges that is being charged from the client, but for Smartfolios, we do not have any annual charges. We do not have any entry fees. We do not have any fixed charges. What we do charge is just the brokerage rate, that is a minimum of 0.5% of the transaction value. And in our analysis, this works out to be cheaper than actually paying the fixed charges or the annual fees, and then paying the associated brokerage also, how much ever little it will be. But for us, we do not have any other charges except the brokerage rate at a minimum of 0.5%. We've also restricted ourselves, in Smartfolios. When you look at it, you might see around 10 to 11 baskets over here. We could have easily had, let's say, 100, 150 baskets for the clients to choose from, but we did not want to dilute the importance of each basket. So when you come into Smartfolios, you will see that each basket is different from the other, either in terms of risk profile, either in terms of investment strategy, or the investable amount that a investor has, or it could be the mode of investment preferable. It could be SIP mode, it could be lump sum mode, it could be anything. Now, so we have restricted ourselves to ensure that each basket is different from the other. We have a diversified stock basket. So even if you have multiple stock baskets from Smartfolios, even if you have multiple stock basket, rest assured each basket will have a different thought process behind it. It could be in terms of risk appetite, it could be in terms of strategy, it could be in terms of the objective of the fund. Each basket, we have tried to ensure that each basket is different from the other. So you can even have multiple baskets from Smartfolios. You do not need to restrict yourself to one basket. If, for example, you have chosen a conservative, your risk appetite is conservative, you can choose one particular basket. Now, at the same time, you want to supplement this investment with, let's say, a different strategy, you can choose another basket from Smartfolio. So with the restricted number of baskets, we have ensured that the basket is diversified from each other, and you will also be able to have multiple stock baskets. Now, there is no restriction, there is no lock-in period that is there for Smartfolios. You can enter, exit at any point of time. So there is no obligation on the part of the client. There is no obligation on the part of the investor to be forced to do anything. You enter into a particular basket, you can analyze the basket, you can analyze the recommendations coming in, and you can exit it at any point of time. So there is no obligation that you need to stay invested for 6 months, you need to stay invested for 1 year. No, you can enter, exit at any point of time if you are not happy with the recommendations or if you're not happy with the objectives that the basket seems to be serving. Now, you can also top up. So you can start off with the bare minimum investment value. You can keep topping up your investments also as and when you're comfortable or as and when you have the surplus funds to invest in. So there is no restriction as such when it comes to Smartfolios. You can start it off at any time. You can end it at any time. And you can keep topping it up also at any point of time. And some of our baskets also have a partial withdrawal option in the sense that you can book your profits also. Keeping that minimum investment amount, you can keep booking your profits also. So some of our baskets even have that facility. So there is no obligation on the part of the investors to continue with this, even though you're not fine with it. Of course, we also have SIP baskets. Just like you have mutual fund SIPs, you can even do equity SIPs in which you can keep accumulating the stocks. So we have ready-made SIP baskets from Geojit Research. We have ready-made SIP baskets, plus the client or you yourself have the option to create your own portfolio. So there is an option called as DIY, that is do it yourself. Now you can create your own portfolio, you can create your own basket and keep accumulating stocks. So we would suggest to create your own basket only for blue chip stocks. So for example, if I want to invest in, let's say, L&T, HUL and TCS, three stocks, three blue chip stocks that I want to accumulate over a 1 year period, I can start an SIP in these three stocks. Just like mutual fund SIP, I will choose a trigger date. I will say 10th of every month, I want to buy 5 stocks of L&T, 5 stocks of HUL, 5 stocks of TCS. So 10th of every month, what happens, irrespective of what the price of the stock is, I will keep accumulating. Let's say I put the time period for 12 months. So at the end of 1 year, I would have accumulated 60 stocks of L&T, HUL and TCS each. I would have accumulated 60 stocks each in these three stocks. So 5 stocks every month for 12 months. So that is accumulation of blue chip stocks. So that is for the long term. Now that is my choice. I can create my own SIP baskets. I can choose the stocks that I want to accumulate over the long term. I can create my own basket. So that option is also available in Smartfolio. So just to summarize what Smartfolios is all about, we offer ready-made baskets of stocks that the clients can choose, that you can choose to invest in. It could be based on your risk appetite. It could be based on a particular strategy or a theme. The recommendations will come to you. The review of the baskets will also happen. So if a stock is found to be underperforming because of a particular reason, that stock may be suggested to exit, and instead of that, another stock would be recommended to buy. So review also happens in Smartfolios. The execution happens without any hassles. You just need to confirm the recommendation mails or the recommendations that come into you via multiple avenues. You just need to confirm those recommendations. We charge a brokerage rate that is a minimum of 0.5%. Various baskets to choose from, depending on what your preference is, but each basket will be different from the other in some way or the other. Investors can top up their investments at any point of time. They can withdraw it also at any point of time. There is no obligation when it comes to Smartfolios. There are no exit charges also when it comes to investment in Smartfolios. You can start your own SIP baskets. You can choose the ready-made SIP baskets, or you can prepare your own SIP basket for the long term. So that in a nutshell is what Smartfolios is all about. That is the broking product or the broking service that we are offering to our clients. Now, I'll also just brief you on the various baskets that we have. I won't spend too much time explaining it, because I'm sure your respective branch or your respective relationship manager will be able to sit down with you and talk to you about the various baskets that we have. So I'll just run you through the various baskets that we currently have in Smartfolios. The first basket that I would like to introduce you to is Prestige. The basket name is called as Prestige. The fund manager is Lotus Dew Investment Advisors over here. Now, this basket is only for investors having an aggressive risk profile, because in this basket, around 80% of the exposure is into small caps. Now, you should understand the risk that small caps carry, right? So that is why this basket is only suitable for investors that have an aggressive risk profile. This basket, it is a high risk, high return basket. It will also have high churning, right? Every month, as you can see, the review, it is done every month, in the middle of every month. In fact, Prestige was recently balanced 2 days back. It was recently balanced. So every month, the rebalance, the review happens, and we suggest some stocks to be exited, and instead of that, some stocks to be bought. So this basket is only for clients with a high risk profile, and also who can handle high churn in their baskets. The buy value, the minimum investment value is rupees 5 lakhs for this basket. But the theme is what is best about this basket, because now we've heard of stock analysis in terms of fundamental analysis, in terms of technical analysis. In this basket, how stocks are chosen, it is based on the events surrounding a particular stock or a sector. So events surrounding a particular stock or sector means, a stock could be influenced by a lot of outside events, by a lot of corporate events like M&A announcements. It could be earning surprises. It could even be balance sheet surprises in terms of debt, a company bringing down its debt, which could add more to its profits. So those are all surprises that could positively impact the stock price. So this basket analyzes the news surrounding a particular stock or a sector, and sees how much positive impact it could have on the stock, and that stock could form a part of this basket. So just because news related price movements are short lived, the stock also will be short lived in a basket. So the fund manager has indicated that the stock may not be present in the basket for more than 3-4 months, because by that time the impact of the news would have already gone in, or it would have already been priced into the stock market. So it doesn't make sense to hold on. So that is why I said this basket is a high churn portfolio. Also, it's a high churn basket also. It is high risk, high return, high churn basket, and it is suitable only for those kind of investors who can handle it. Because you need to be exact also. You should not question, okay, why this stock is there, because there may not be any fundamental reason for this stock to be there. It could just be there on the basis of news in the basket. Then, of course, we have another three baskets that is more on the traditional lines. Prime, Magic, and Ace, which is managed by Markets Mojo. Now, Prime, Magic, and Ace, you have more conservative approach, or more traditional approach, I should say, in which stocks are analyzed based on fundamental analysis and technical analysis. Fundamentals in terms of quality of the company, valuation of the company, and the recent financial trend, plus technicals are also analyzed. Now, a combination of these criterias, they will assign a score to a particular stock. If the score is high, it will form part of the universe of stocks. So Prime will have 15 of those stocks. Now Prime is for conservative investors, because Prime has the highest exposure to large caps among these three baskets. So currently, as per the latest fact sheet, Prime has around 61 to 62% of exposure into large caps. Remaining goes into mid caps and small caps. Magic is again for moderate investors. Magic has around 12 stocks in the basket. Uh, Over here, comparatively, when you compare it with Prime, it will have lesser exposure to large caps. So currently, I think Magic has an exposure of around 53 to 54% into large caps, and remaining into mid and small caps. So the percentage of exposure to mid and small caps is slightly higher when it compared with Prime, and that is why we say that it is ideal for clients with a moderate risk appetite. Uh, uh, the third one is Ace. Ace is for aggressive investors, because Ace has the highest exposure to small and mid caps. When you compare it with Prime and Magic, ACE has the highest exposure to mid and small caps, and that is why we would suggest it only for investors with a aggressive risk profile. ACE currently has around 9 stocks in the basket, and that concentration is also part of the aggressiveness of the basket. All these three baskets have a minimum investment value of 2 lakh rupees. The review is active in the sense you can keep at the end of the day, the next day there could be a review that is happening. So there is no fixed review time. It is as and when. It is an active review option in these three baskets: Prime, Magic, and Ace. You can keep topping up with, let's say, 20,000 rupees. Also, you can keep topping up in these baskets. Now, these are based on technicals and fundamental analysis. Now, I'll just introduce you to a couple of thematic baskets that we have in Smartfolios. The first one is called as Southern Icons. Southern Icons, now, this basket invests only in South India based companies, which have companies which are registered in South India, mainly in the 4 states of Kerala, Tamil Nadu, Karnataka, and Andhra Telangana. Companies that are registered in these southern states only will find a place in this basket. Now, this basket is based on an exclusive index by MSCI, that is, which was earlier the Morgan Stanley Country Index. MSCI publishes an exclusive index for Geojit, which is the top 20 high quality, fundamentally strong companies, southern companies. Now, this basket is purely based on that index by the MSCI. This is again suitable for moderate to aggressive investors because the majority of exposure is into mid caps. The benchmark for this basket is the Nifty 500. The review happens quarterly, that is every 3 months the review happens. So this is more of a passive investment because it is based on the index that is provided by MSCI. The rebalancing happens every 3 months or every quarter. The next one is the recently launched Ethical. It has been around 3 weeks since we launched this basket. Ethical is a basket which focuses on long-term wealth creation, and the stocks that form part of this basket are also Sharia compliant equities. Now, Sharia compliance, we ensure it by following a list provided by TASIS, that is the Taqwa Advisory and Sharia Investment Solution. TASIS provides us the list of 100% Sharia compliant stocks, and our research, what they do is they shortlist the companies. They shortlist companies from this list that is provided by TASI. Now, it is not just a normal shortlisting of stocks. There is a objective towards this basket also. Now, the focus of this basket, in addition to it being a Sharia compliant basket, the research side also focuses on ensuring that the new sectors. Now, we are all living in a new world. We are all living in a new normal. There are new sectors coming up, new reforms coming up, which could positively impact specific sectors or specific stocks. So in this basket, the research manager has tried to ensure that those stocks which could benefit from the new sectors and new reforms that are being undertaken in the economy, and also a global strategy like China plus one. Earlier, China was the only supplier for a lot of economies, but now the other economies are looking at substituting, not just substituting or complementing China with other suppliers also. So especially India could benefit from this China plus one strategy. So our research managers try to ensure that they pick stocks that could benefit from the new sectors, the new reforms, and also strategies like China plus one. So it is not just about being Sharia compliant. It is also a objective of following the new sectoral or the new reforms that are being coming in the economy. Again, since it is a thematic index, it is suitable for aggressive investors. The benchmark is the Nifty 50 Sharia index, and review is ongoing. It is again ongoing. It is based on any changes from TASIS, or it could be because of any changes in the stock outlook. In fact, we are planning a rebalancing shortly in this ethical because of a change in the stock outlook of one particular member of that basket. So this is the ethical basket, which is also Sharia compliant. Then we have the very traditional forms of analysis that is based on pure fundamental analysis. We have three baskets by Geojit Research. Now, the first two baskets, that is classic and defensive, these are SIP baskets in which you can start off systematic investments, either weekly SIPs or you could have monthly SIPs in these baskets. You can start off your investments in that. Classic represents the top picks from Geojit. It is a multi-cap basket exposure across multiple sectors. Defensive, again, it gives more weightage to defensive stocks, basically stocks with into sectors like FMCG, IT, and also into the large cap space. So defensive basket gives more weightage to the defensive stock. So it is basically suited for investors with a conservative risk appetite. So these two are the SIP baskets in which you can also start your systematic investment plans, be it a weekly investment plan or a monthly investment plan, just like your mutual fund SIPs. There is also a lump sum basket that is called as Alpha. Now, this closely resembles Geojit's model portfolio. Pure fundamental picks, long-term picks. Major allocation is into large cap stocks, the lump sum investment. Now, for all these three stocks and the ones that I mentioned earlier, that is Southern Icons, Ethical Basket, Classic, Defensive, and Alpha, the minimum investment value is not set. In the sense, it will keep varying based on the stock constituents of that basket, right? So that is how this works. So this is based on pure fundamental analysis, and it is basically for the long-term investment. So those were the baskets that we currently have in Geojit Smartfolios. We are also in the process of adding two more baskets in the near term. Hopefully within 1 week's time, 1.5 weeks time, we should be adding two more baskets with a completely different methodology and investment strategy. So Prestige in the last 1 year has given 51% returns. It was much higher maybe a month back also, but the volatility in December has impacted its returns a little bit. But in spite of that, Prestige has given 51% returns. Prime, Magic, and Ace, it has given close to 63%, 68%. Ace, which was for aggressive investors, has given 90% returns in the last 1 year. This is all against a Sensex return of 21% in the last 1 year, as on December 31st. Classic SIP and defensive SIPs have also fared decently well, considering that these are all systematic investment plans. Alpha has underperformed a little bit, but in our discussions with the fund manager, it was basically due to the underperformance of a couple of stocks, but he has given assurance that it will give decent returns in the coming months. Southern Icons, it has just completed 5 months. Mainly because of its thematic ability, it has underperformed currently with close to -7% returns. Ethical, back-tested returns from December onwards, it has given a 6.6% returns. It was launched only towards the end of December. So the returns that you're seeing over here, 6.6% is the back-tested returns for Ethical. All these 1 year returns are against a Sensex return of 21%. Now, see, these are all historical returns. This is no guarantee for the future, or this is no indicator as for the future returns. Last 1 year has been especially beneficial for the stock market investors. So, our investors who have been in the stock market in the last 1 year, especially, I'm guessing, should have made money. In Smartfolios also, it has been a good time, except for maybe for the Prime, Magic, and Ace. Maybe the last 2-3 months have been a bit volatile. Prestige, December would have been volatile, but that follows the stock market volatility also that we witnessed. But when you look at it over the long term, in the last 1 year, Smartfolios has been able to generate considerable alpha over its benchmark, benchmarks. So in that sense, it has been a good year for Smartfolios. I'm not saying that we can expect such good returns in the next year also, because equity markets, because of the valuation, because of the global issues that are there, it could be volatile, it could be impacted. But ideally, what the fund managers are raring to do, or what they are expected to do, is beat the benchmark returns by a fair margin. I'm not saying that we are giving you 20 percentage, 30 percentage returns. No, because that would be completely wrong on my part to do anything of that sort. There is no guarantee of returns. This is again coming down to it. This is again an equity market. This is again an equity investment. There is no guarantee. But what the fund managers strive to do is they strive to beat the benchmark returns. So in 1 year, 9 months might be good, 3 months might be bad. That is the basic cycle that a stock market follows. Maybe going forward, these baskets will again start outperforming. So it is a cycle. It is not a magic wand where it is guaranteed to give you good returns. But what the fund managers strive to do is to beat the benchmark returns over the long term. This is not a short term investment by any this thing. It is a long term investment, just like equity. So how it works, this is the last slide of my presentation. We'll go over to the Q&A after this. How it works, very simple. Most of you or all of you should be having a Geojit trading account. Your Geojit trading credentials, which you use to log into Selfie, you can use the same credentials to log into Smartfolios also. You can choose particular basket depending on your risk appetite. You can choose multiple baskets, not just one. You can choose multiple baskets based on your choice. Accept the recommendations that are coming in. So the initial recommendations will come in. On review of the basket, there will be additional rebalancing recommendations that will be coming in. Our sincere request to, or humble request to all of you is to accept the recommendations without using your bias in it. Now you have registered for Smartfolios to utilize or to complement your own investment strategy, or to utilize an expert fund manager strategy. And I'm not saying that the recommendations, all of them will be 100% right. No. All we are saying is that the returns of the portfolio should justify your investment in Smartfolios. It need not be a one stock investment. It need not be that one stock is at a loss. Why is Smartfolios bad? No, we look at the portfolio returns as a whole, and that too over the long term, not over the short term. So recommendations, it might be hard for you to accept. I myself agree to that, because personally, I think it was in April of this year. There was a recommendation. I think it was from Prime or Magic, one of the baskets. There was a recommendation for HDFC Bank to be sold. HDFC Bank recommendation was a sell. Now, as an investor, even I would have difficulty in accepting that recommendation, because HDFC Bank, for me, it is a blue chip bank. It is one of the largest banks in India and could have the potential to grow. But there was a sell recommendation from Smartfolios. Now, most of the clients had to exit it at a loss. Now, those clients who exited it at a loss, right? They, instead of HDFC Bank, they got an advice to buy ACC Limited. So HDFC Bank also, from that point of time, it could have gone up, yes. But ACC has performed better than HDFC Bank over that time period. So when a recommendation comes, it is not that the stock is bad or whatever. Now the rationale that was given. So whatever recommendations come to you, there is always an investment rationale that is there. There is a proper reasoning why we are recommending this stock to be exited. So why HDFC Bank was given as a sell? There was a short-term concern at that time regarding the NPAs of the bank. There was a short-term concern regarding the credit card division of the bank. I fail to remember the exact reason, but I remember this rationale coming in, saying that the NPAs were going up, and because of the credit card division, there were some problems in the credit card division. There is a short-term concern that the stock could underperform, and that is why that sell recommendation was given. So people who acted on that recommendation, in spite of booking a loss in HDFC Bank of all the stocks, in spite of booking a loss, they bought ACC Limited, which has given better returns than HDFC Bank over the same time period. So, but I'm not saying that this will be true all the time. But what I can tell you is that there is no arbitrary recommendations that will come to you. Each recommendation that comes to you will have a rationale, will have a reason why it is coming to you. This is not a brokerage product. We are not looking to increase our brokerage by doing all this. No, there is a proper rationale. The fund manager will have to answer to us saying on why they have recommended a stock to be exited. So that discipline has to be there on your part also. It could be loss booking, it could be profit booking. You might have a sentimental attachment to a particular stock because we are all humans. We have emotions. There could be an emotional bias also when it comes to investments. But when it comes to smartfolios, my humble request for all of you is to keep your bias aside, to keep your sentiments aside. Just follow it as it comes, because only then will we be able to utilize it to its fullest. I'm not saying that we will be right 100% of the time, but in the long term, Smartfolios has the potential to give better returns um, than your benchmark. So with that, I come to the end of my presentation. I will also just show you a small uh, brief on how the Smartfolios dashboard looks like. So when you log into Smartfolios, this is what your dashboard will look like. So now I'm showing this. This is actual uh, dashboard. One of my friends who has invested in this. If you look at this, this is the dashboard. This is the total investment that the client has done. This is the kind of returns that he has generated. Now, when you go to my folios, you can see. So, as I said, you can invest in multiple folios. This client has invested in Magic and Prestige, different. You can see. You can click on each basket to see the individual returns and the holdings of this basket. You will be able to see order book also. You will be able to see for Smartfolios. You will be able to see the order book for this thing. So this will form. So whatever stocks you buy through Smartfolios, it will form part of your demat holdings also. So you will be able to see these stocks in selfie also, but you will not be able to transact, in the sense you will not be able to sell those stocks via selfie. If you want to sell Smartfolio stocks, you can deactivate your basket today and you can sell those stocks via Smartfolios today itself. If you do not want to sell those Smartfolio stocks after deactivation, it will be available in your normal selfie account tomorrow. So you can choose to sell it as per your wish. So as I said again earlier, there is no obligation. Only when you have bought Smartfolio stocks, you will not be able to sell it through selfie. But after deactivation, you can either sell it on the same day via Smartfolios, or the next day, or the days after, you can sell it through selfie. So this is what your dashboard will look like when you have registered for Smartfolios. You have the various. So even when you log into Smartfolios, you will see these options. It is as simple as clicking on a particular button. You can click on invest now. For example, you want to invest in the defensive basket, you can click on invest. Again, you can see the indicative returns, the historical returns you can see over here. Click on invest now. Ensure that the funds are there in your trading account. That is all. You don't need to transfer it into any particular fund account or anything. Just ensure that the buying power is there in your trading account and the execution will happen automatically. Right. So with that, I will end my presentation. Dipali, I think from 45 minutes, I think I took 5 minutes additional. Dipali, so how do we go about? Uh,
Uh, so there's a lot of questions, Sony. Thank you. I think you finished it just in time. We have about 10 minutes for question and answers here.
right.
One question that is repeated quite a few times is whether a person can invest in more than one smartfolio option. So that you've clarified very nicely. Everyone, I've put it in the chat box as well. You can invest in different products within the Smartfolio basket also. Thank you for showing the dashboard just now, Sony. Can you also show us how, if somebody wants to shift from one Smartfolio to another, is that possible? Was a question I saw somewhere.
Okay, so that is not possible. There is no switching option possible because we have different fund managers for different baskets. So switching is not an option. The only thing that you can do is you can exit a basket at any point of time, sell the stocks, utilize those funds to again register for a new basket.
Okay. Mr. Aniket Burman wants to know a question that comes to any normal person's mind. Okay, any investor will think this way. He's asking, he has say 10 lakh rupees. Is it a good idea to invest in Smartfolios or individually contact the relationship manager in Geojit and ask him whether how I can split it between large, mid, and small cap stocks?
Yeah, so that depends on your relationship manager, your relationship with your relationship manager also, and how good of a relationship manager he is. Because why one of the reasons why we have started this product, or why we have started this broking product, is that there were a lot of queries from our clients, a lot of complaints from our clients regarding the research services that we were providing. So this is just to supplement our research analysis. Smartfolios, I've laid it bare. This is the kind of returns that Smartfolios can give you. This is the kind of strategy that you can follow. So if you think your relationship manager can help you, I have nothing against that, because it is the same company. It is Geojit after all. But over here, you will be able to benefit from an outside view also, because we have outside research partners also contributing to this Smartfolios. I
If
hope
I
that
may
was the
add,
question, Dipali. Yeah.
yes, if I may add a little, what we are doing here is we are giving you an add-on product. You already have some understanding of the market. You know when you want to buy or sell a particular stock, right? You also have a good, let's say, good trustworthy relationship with your RM also. Now here there is a process. We are saying trust the process and try something called a Smartfolio, which has a proven track record for the last 2 years. You don't have to jump in with your entire 10 lakh rupees maybe to start with. You can consider putting part of your money and then look at the returns. What a lot of people tell us is that the simplicity of execution is a big draw. The performance has obviously outperformed the Sensex by leaps and bounds, but over and above that, one doesn't have to every time log into the trading platform, log into Selfie, or call up the dealer to do every transaction. Here, all you have to do is say, okay, accept when you get a message. Okay, you'll also have a Smartfolio app very soon. So the simplicity of actually executing the trade is extremely useful. It's very, very well accepted is what we hear from the clients. I have taken Smartfolio for 1 year, but I seem to have got only sell recommendations in the past few months.
Okay. Because that is not right. Because once I think the sell recommendation, so how Smartfolios works, once the sell recommendation is executed, for especially for Prime, Magic, Ace, Prestige, and all that, all these baskets, once the sell is executed, you should be receiving the buy recommendation. So I think there could be something wrong with the individual's basket. If you can get in touch with your branch, if you can get in touch with your relationship manager, please have them put the query across to the Smartfolios team. I'm sure we'll be able to solve that out, because we have been receiving buy recommendations also.
Okay. So again, one Mr. Suresh Jain is also saying for the last 1 month, I don't seem to have got any recommendations. Nirmala Jain. Again,
Um,
something to do with the communication there?
Yes, I think it should be, because only after, see how this works is only after the sell recommendation is completely executed, will you receive a buy recommendation. So the recommendations might be coming to you, but if you do not accept the recommendation, the sell recommendation, there will not be any buy recommendation coming to you. So you have to accept the sell recommendation first, ensure that the sell is executed, and only then the new buy recommendation will come to you. It is not that recommendations will come to you irrespective of whether you accept it or not accept it. The acceptance is on the client, yes, but you will receive buy recommendations only after the previous sell is executed.
I hope that clarifies your doubt, Mr. Jain. Only when you have executed the earlier transaction that is recommended, then only the next transaction, the counter transaction, will be recommended. So maybe if one does not accept the sell recommendations, which is probably why the buy recommendations are not coming forth. Mr. Raghavendra wants to know, should we put in Geojit account rupees 2 lakhs at a time?
Yes, that's right, sir. So basically, you just need to ensure that your funds are there in the trading account, and then when you accept the recommendations, it'll just be like a normal trade, like a normal delivery trade that happens. Your orders will be sent to the exchange, and money will be debited. So just ensure that your 2 lakh is there in the trading account.
Okay, thank you. Uh, I did you mention virtual cash somewhere, Sumi? I seem to have missed out.
Yes, yes, yeah. It was there
So what is virtual
in the
cash is what
dashboard. Yeah.
Cardos wants to know.
Yeah, so I'll just share my screen once again, just to. So this is where you basically see the virtual cash figure. Now, for this client, the client has invested, let's say, a total of 7 lakh rupees. Out of 7 lakh rupees, there will be a cash remaining. There is a cash remaining of around 14,000 rupees for this particular client. Now, this could vary across clients. So this 14,000 rupees is remains as cash for this is as per Smartfolios calculation. Now, what we also expect is that 14,000 rupees to be there in his trading account, because when a recommendation comes in the next time, we are expecting that cash to be there in the trading account. But in a real life scenario, 14,000, this 14,000, which is the virtual cash, we have named it because this is as per Smartfolios calculation, this cash needs to be there in his trading account. But in a real life scenario, this 14,000 rupees might not be there in the client account, because the client himself could have, or himself or herself could have utilized it for trading purposes, for the other normal selfie buying purposes. The cash could have gone out as payout to the client, because as per the new SEBI rules for payout, now this will be a monthly rolling settlement also. So it could have gone out as payout to the client also, right? So 14,000 virtually it should be there, and as per Smartfolios it should be there. But in the actual client account, this 14,000 might not be there, because, as I said, it could have been
They
debited
have used
for,
it elsewhere.
yeah, or it could have gone out as payout. It could have been debited as DIS charges, any number of reasons. But this is the actual cash remaining as per Smartfolios, and this is what you should ensure that it is there in your trading account also.
Okay.
All the future recommendations will come on the basis of this
Based on
cash
how much
remaining.
balance is there. Okay.
Yeah.
This Shaheen wants to know. She says, I have joined Smartfolios. Till the selection of stock, I was very satisfied, but we don't know when to book profits. And when stock goes to a particular level, we are not allowed to exit in one stock, but we have to exit from the entire portfolio. This is a drawback.
Understood. Understood. Yeah. So again, coming back to, I mean, a very valid point, I think what Shaheen has mentioned. So what happens is, as I said earlier, now, if this was a broking product for us, I mean, if we wanted to just, if we were purely interested in brokerage, we could have easily done what this client is telling. A stock goes up a certain percentage, because, for example, we've seen stocks going up by 40 percentage, the same stock also coming down by 40 percentage, and even we have asked the client to book losses in that same stock also. So we have seen multiple situations happening. Now, if we were only bothered about the brokerage, a stock goes up by 20 percentage, we could have easily asked the client to book profits in that. We could have easily asked, because there would be no questions asked. Okay, the stock has gone up by 20 percentage. We are asking you to exit at 20 percentage profit. That's it. But over here, each basket, as I said earlier, it has its own strategy, it has its own methodology, it has its own rationale. For example, I'm assuming that if this client has invested in, let's say, Prime or Magic. Now, the methodology in these baskets is not to look at the target price. It is to look at the fundamentals and the technicals of that particular stock. So, if the fundamentals are strong, the technicals are also bullish, that stock will remain a buy, even if it goes up by 50%, 60%, or how much ever it goes up to. So, it will still remain a buy. So I understand what this client is trying to say, but we are only focused on the methodology and on why we have chosen a particular stock in the basket. There is a proper rationale that comes in. That rationale will not be that it has gone up by 20%, so we are exiting the stock. No, that will never be the rationale. The rationale will be to buy the stock for a particular reason or sell the stock for a particular reason. It could be fundamental, it could be technical in nature. So there will be a proper rationale. What the client can do, as I said earlier, there is an option for partial withdrawal. So you will not have to sell the entire portfolio. If let's say you have invested 2 lakhs, the 2 lakhs has gone up to 2 lakh 50,000 rupees. You can partially withdraw 50,000 rupees. Now 50,000 rupees, again a recommendation will come to you amounting to 50,000 rupees. You can accept the recommendation and we will sell the stocks worth 50,000. It won't be exact 50,000 because of the stock price fluctuations and all that, but we will send you a recommendation for exiting or booking profits of around 50,000. So you can maintain that minimum 2 lakh rupees and keep booking your partially booking your profits. Of
The
course, after
stocks that get
considering the
sold,
cash remaining
Sony,
also. Yeah.
the stocks that get sold for this 50,000 rupees, for example, are the stocks recommended by Smartfolios, correct?
Yes, yes, yes.
Yeah.
So that will be a part of the Smartfolio holdings itself. The stock recommended to sell will be a part of the Smartfolios holding itself, and we will suggest, okay, it will be a collection of stocks. It may not be just one stock. Out of 12 stocks, maybe to book the profits, we might suggest to exit partially from, let's say, 4 5 stocks. So it is again spread over.
Thank you.
But that is how it works. But after considering the cash figure also, so 50,000 rupees you want to withdraw partially, you already have, let's say, 15,000 rupees that is supposed to be there as cash in your account. So 50,000 minus 15,000, that is 35,000 rupees recommendation will come into you.
Okay, that makes sense. Mr. Anuddin has very actively been asking questions, and a lot of the questions I think we've covered. There is one that is, can I start an SIP on the basis of market conditions? If market is down by 1,000 points, for example, does it make sense to start an SIP in Smartfolios then?
Yeah, see, that is what I'm saying. See, SIP is again you are accumulating. It is basically to utilize the fluctuations in the market. SIP again for Smartfolios, unlike mutual fund SIPs with all its benefits, Smartfolios SIP you can start and stop it at any point of time at that instant. So if you are starting it today, let's say the market crashes by 1,000 points today, you can start off an SIP today itself, right? You can start off your Smartfolios SIP today, and you are saying that okay, you want a weekly SIP because assuming that you expect the market to be highly volatile before the budget session starts, you expect the market to be highly volatile. You can start off your weekly SIP also. So SIPs definitely, if the market is expected to be volatile, definitely go for SIPs, which is more a conservative approach for your investment. So you can choose weekly SIPs, you can choose monthly SIPs, depending on your outlook. Uh, the baskets that we have, that is classic and defensive, it is fundamentally oriented picks are there in the basket. So it is even suitable for the long term also, irrespective of the timing of the SIP.
Thanks. Um, Please guide us as to when we can top up our Smartfolios with the reserve money with respect to how to time the market. Meaning, if the market is down and somebody wants to top up, how does he go about it?
Right. So if you already have an existing investment, let's say you start off your Mojo, your prime investment, or let's say prestige investment, you have started it off, let's say 2 days back. Now, today, if you can add on your additional investment today, the recommendation for that will come in the next day, because for additional investment we will require a day's time to analyze the closing price, to analyze the stocks. So you do an additional investment today, the recommendation will come the next day. Also, one thing that I forgot to mention is that let's assume that you start off your Smartfolios investment, for some reason or the other you are unable to accept the recommendations coming on that day. You will keep receiving recommendations every day until you accept it or until you choose to deactivate that basket. So don't worry if you think that okay, I couldn't accept the recommendation today. You will receive the recommendation tomorrow or the day after that also. Or if your recommendations have been partially executed because of fund issues, the next day you will receive the balance recommendations, right? So that is how it works.
Okay. Uh, is the cost of buying and selling shares, again, Mr. Anuddin had asked this earlier, buying and selling shares higher if I do it through Smartfolios?
Yes,
Basically, he's asking
as
is the
I
brokerage higher?
Yes. So as I mentioned in my first slide, your normal online brokerage could be 0.3 percentage, and only your offline brokerage, I'm talking about the rack rates, is at 0.5 percentage. Through Smartfolios, whatever you sell and buy, irrespective of your back office brokerage, you will be charged a minimum of 0.5 percentage. So for our resident clients, especially, if your charge online charge is at 0.3 percentage, uh, your for Smartfolios you will be charged at 0.5 percentage. So yes, it is higher, but you are getting a recommendation over there. You're not doing anything, you're just accepting the recommendation. So if you want to balance that out, so there is no additional charge that you're giving over there.
Okay. 1 second. By mistake, the dashboard in Smartfolios got deleted. I already have invested in Smartfolios. How can I reinstate the dashboard information?
The dashboard can never get deleted. You might have deactivated your basket. That is why there would be nothing showing on the dashboard. Again, this would be a very client specific issue. So I
Okay,
would
that's
request
not
you to
that
get
we
in
have.
touch. Yeah.
Okay, you already explained what is virtual cash. Okay.
Yeah. So I think there is one from Mr. Murli Kavallur. Prestige Basket seems to be not reviewed and reshuffled effectively. So Prestige Basket, again, as I said, this is a very unique themed basket with a minimum investment of 5 lakh rupees. Um, this basket is reviewed every month, middle of every month. That is the 15th or 16th of every month, usually. And usually we see a high churn in the folio. And this has been one of our better returns giving basket in spite of the volatility, in spite of the risk associated with the basket. But the problem is if the client or if the investor does not uh, track for Prestige, we would require more of your time because there is a lot of churn that is happening in this basket. I'm telling that openly because if you do not rebalance it correctly, the Prestige basket will be completely imbalanced. So whenever a rebalancing option comes, especially in the Prestige basket, please ensure that it happens properly. If it does not happen, because we usually see for especially for NRE clients, PIS clients, this Prestige basket forms it is a little bit of a problem because in Prestige we issue the sell and the buy on the same day. So the sell margin might not be updated for the buys to happen. So in that sense, yes, for PIS clients, it is a little bit of a hassle for Prestige. But if you ensure that the rebalancing happens properly, Prestige has given good returns, and it is reviewed and reshuffled on a monthly basis.
Okay. Thank you. Because I think one or two other people also asked about Prestige. One question that has come is why do we have different review frequencies for different products?
Why do we have?
Different review frequencies. So some of them are monthly. There's another one that was quarterly. Why don't we
Yes.
have a weekly or less frequent, less time wala?
Right. So again, as I said, this is on the fund manager. This is on the research partner. It is based on their outlook. It is based on their views. Now, for example, the quarterly option that the quarterly review that we have, I think that is for Southern Icons especially. Now, that is a very passive investment. It is based on an index that the MSCI gives us. MSCI will review the index every 3 months. So on that basis, we will review it over here also. So those are all passive investments and it is suitable for those type of investors. Now, for example, a client could have chosen Prestige, which is your high churn portfolio, high churn basket, and you can also choose Southern Icons, which is again a quarterly basket, review basket, right? So this can complement your investment styles. If you are an aggressive investor or in your normal selfie holding, you have your blue chips. You can focus on mid and small caps over here. The review, it depends on the fund manager. It depends on the fund manager's outlook, and we do not interfere in the fund manager's fund picking strategy. So that is on the fund manager.
Thank you. I think we've way past the timing that we decided earlier. Okay, so thank you so much, Sony, for the very detailed session, for clearing so many doubts, so many questions we had. We are going to keep the chat box open till 6 o'clock in the evening.
Deepali,
If
just
there's a lot
one
of
second.
another question.
One question after all this is: will Geojit assure guaranteed returns for the Smartfolios plan? No, please do not assume that this is a guaranteed returns Smartfolios, or this is not a plan by any this thing. These are recommendation based on various analysis. It is sent to the client. This is an equity investment product, and it carries all the risks inherent to equity investments. Sorry about the Deepali. Yes.
No, actually, thank you. I missed out on that question.
Yeah.
So, once again, the motto of Geojit is people you prosper with. And Sony started his session and he's ending his session with telling you we are not a guaranteed product. We do not promise any fixed returns for any of the investments. Higher the risk, higher the return, but one should be willing to take that risk. We also have low risk, low return products that we are selling. Smartfolio is purely equity oriented product, so that's the kind of risk they carry. But we do tell you what is why, if anything is not right, if anything is concerning you or us, we do try and come back to you and explain what is happening in that particular case, like he was just explaining to us about prestige. So thank you so much, Sony. Thank you for very nicely, very articulately explaining about the product as well as addressing questions. Thank you so much, all our clients who've attended this session today. We had more than 400 people attending. There's a lot of questions that we were not able to address, but please feel free to reach out to us. Most of you are clients, so you know where your branches are, your RMs are. You can write to us. You can directly talk to your branch managers and get any queries that you have answered there. Like I said earlier, we are keeping this chat box open till 6 o'clock. Please give us suggestions in terms of what are the other subjects that you would like us to cover in this. We look forward to your suggestions. Be safe and keep investing. Thank you, everyone. Thank you, Sony.
Right. Thank you very much. Thank you very much, Deepali, for this opportunity. Thank you to all our clients for sparing their time. Important to us. Thank you very much.
Thank you, everyone.